So you've just seen the first video on putting together your price action, moving averages, horizontal levels and cyclicity. And we're now going to work through another currency pair, the dollar yen this time. And again, we're going to start off at the beginning of 2012. We'll just work through the entire year and plot the price action entries that we see bar by bar. Now, on this particular chart that we've got in front of us, this is the dollar yen, of course, and it's quite a sideways market at this point in time. There's no real reason to want to be a buyer or a seller here, so we're going to wait until we've got ourselves an actual trend. Wow, okay, it's really starting to accelerate through here. Now, first of all, we can see that we had this resistance level, where price has actually aggressively broken through it and seems to be moving quite convincingly to the upside. In fact, this is a very, very strong buyer's market right now. Now, when you've got these strong buyer's markets like this, there's no reason why you can't trade them on a smaller time frame, like a 4-hourly chart. Because while there don't appear to be any entries on the daily charts, on the 4-hourlies, there of course will be. However, our first real entry into this market is only occurring now on this inside candle. In fact, if I just draw the arrow underneath, we can see the 20 is pushing up to the 50, moving average-wise. We've broken through the resistance level, so this is a breakout in action now, and we've really the first opportunity we've got to get into this marketplace is actually the inside candle that's formed here. So let's just go ahead now and actually mark our entries and our stops on that. We'd enter just above the inside bar here, and we'll actually put a stop loss there as well underneath. And what I'm going to do here is just make the stop loss in red so it's more visually understandable. Now, this here is a very strong bullish market. We wouldn't normally enter off of an inside bar itself straight away. It's just the fact that it's such a strong bullish move here. We normally actually wait for perhaps a different price action signal or more of a pullback. But the fact that we've got ourselves this strong move, we're going to try and find a way into it. Now, we can see here that we've been triggered into the trade on this inside bar or inside candle here, and straight away we've actually got a pullback as well. So this is actually our first real reversal bar formation in the entire move up. So we've been quite unlucky straight away. We've got it on the inside bar, it's gone in our favour, and it started to pull back. Now that would instantly make me want to move my stop loss for around the break-even level, just underneath this seller or bearish candle. As it happens, it's okay. This inside one here actually is still running in our favour. Actually developed another inside candle here as well, which I missed. We can see that price is moving strongly in our favour, and we're happy to let it keep doing so. Okay, so our stop loss is around break even on this first trade. We wouldn't really have taken this second inside bar purely because of the fact we'd actually have two very similar trades there. But we are getting interested now where we've actually got ourselves a bullish pin bar. So we've got moving averages in our favour, cyclicity in our favour, and we've also got ourselves a bullish pin bar there as well. So a good potential entry into the market here. Our entry point on that is going to be just above the high there, and we'll put our stop loss underneath there. Now, bearing in mind that if this order does get triggered, I'd actually move the stop loss for the inside bar or inside candle to exactly the same position, just to make them easy to manage. We've been triggered, so both stop losses are now at this red line here where the pin bar stop loss is. We're in the trade and it's running at a profit for us. So we're going to wait until we see a price action signal that gives us a reason to exit. Got a bit of a doji bar there, nothing particularly amazing about that. Bullish bar, inside pin bar through here. We're still happily to the upside. Buyer, seller. Perhaps the inside pin bar here could even be an entry point. We'll mark the entry there, and of course we'll put the entry and stop loss there as well. So we're already in two positions running to the upside, and we'll move the stop loss for the inside bar here and the pin bar to underneath this inside pin bar, because only if it actually gets triggered, because we're looking to run it to the upside aggressively. Okay, so as you can see here, this pin bar has not been triggered, so the stop losses are still back down at this level here. We never moved them up. because of the fact we only moved it if this pin bar got triggered. It didn't get triggered, so we're happy to leave the stop here. One trade is risking 1%. This trade is actually locked in a small amount of profit. And we actually have ourselves another bullish pin bar. So bullish pin bars all around right now. Another entry signal here. It also happens to be an inside pin bar. And we can see the shift from sellers to buyers. We're interested in getting into the market here on this example. And our entry would be here, with a stop loss underneath, like so. It's also worthwhile mentioning that after this inside candle, this bullish pin bar was actually a ring low formation as well. And it's hard to tell here, but it looks as though this could have been a ring low or an inside candle there. But again, you've got the shift from sellers to buyers, and we've got a bullish pin bar. So now that this one's been triggered, the stop losses on this first inside candle and the bullish pin bar can both move to underneath this bullish pin bar. So all the stop losses are now going to be sat underneath here. One trade is risking 1%. This trade is risking about 1/3%. And this trade here is already locked in a significant amount of profit. So we're happy with that one there. The trade is still continuing in our favour, so we're happy with that. And we actually have ourselves another inside bar here we could potentially enter on. The only thing to be aware of now is that while this is a strong trending marketplace, it's not going to go on forever. We've actually already had a very strong move through here. Moving averages are showing no signs of slowing down, but seeing as we've already got 3 positions to the upside, I probably wouldn't want to wait any more on that. In fact, I'd actually be trying to lock in some of the profits that I've already made here. Now, bearing in mind that our stop loss for all 3 positions is currently underneath here, we've got 1 1/3% at risk at the minute. It's about time we got our stop loss moved to make sure all 3 trades are risk free. Remember, we always want to think about what we stand to lose, not just what we stand to make. So we'd move the stop loss underneath this inside bar now, or this inside candle, and I do that deliberately really, just to make sure that I've locked in profits through here. But also because it's a reversal bar formation, which, seeing as we've got 3 positions, could be a good exit. And as it happens, we do get stopped out, and the market doesn't really go much further, to be fair. It's kind of just plateaued out here now. But we've just certainly made some money out of these 3 trades. We have a look at them, we can work out what we've made. The first one was risking around 35 pips. 35 pips there. And we turned around with a profit of 225 pips. So it's 225 pips from risking 35. We made 6.4% off that one trade. Very, very healthy return. We've now got ourselves this pin bar, which was risking around 80 pips and returned around 125 pips. So we made ourselves another 1.5% there. And off this next pin bar formation, we were risking around 70 and we returned around 75. So just around a 1% trade there. But certainly over this February period, it was a particularly good trading period for trend-based trading. As we are right now, we've got ourselves a pullback to the moving averages and potentially back to this resistance level soon, these highs. So we'll look for an entry point into the marketplace, which we've got here. We've got a reversal bar formation. So we've got ourselves an entry signal just above the bullish candle there, with our stop loss underneath the swing low. We've got ourselves the support and resistance in our favour. We've got cyclicity in our favour. And we've also got ourselves, of course, the moving averages and price action in our favour. So we've been triggered into the trade there. We're in profit very slightly. We then got ourselves a small seller bar, or a small seller candle. It's a bullish pin, so we're still okay there. Okay, it's pulled back a bit now. So we've pulled back. We are just about still in the trade there. Might have been stopped out. We've still got this bullish pin bar, but we can see we'd have probably been stopped out on that one. That would be a losing trade. So a minus 1%. We've got stopped out. Market's kind of going sideways through here right now. It's not particularly clean. After this big strong move, it's probably going to take some time to consolidate and go sideways. if anything. Now, if we look at the cyclicity, it's quite interesting. First of all, cyclicity-wise, we've got lower highs and we've got lower lows as well, which is our first telltale sign of a downward trend. And we've actually also got ourselves a 20 moving average pointing down. Now, the 20 is still the wrong side of the 50 at this point, but you can see how it's turning over. We're expecting to start seeing a move to the downside. And in fact, looking at this is actually quite a good opportunity. I'll go through and explain now, because we've got this support level that becomes resistance. So support becomes resistance for a start. We've got lower highs and lower lows with cyclicity. Granted, the moving averages aren't great at this point in time. They're actually the wrong way around. But we've got price action with a bearish pin. We've got support and resistance and cyclicity in favour. There's actually a really strong reason for wanting to be short here. And another good thing here as well is it's actually a small bar. It's small risk. That means that if this does move in our favour any real distance, we stand to make a lot of money from it. So we'll actually be looking at putting an entry point underneath this bearish pin with a stop loss just above it. Now the nice thing here is our stop loss is actually like 30-35 pips again. It's a nice tight stop. We're in the trade. It's slightly in favour. Nothing amazing for now. We want to be short. We're happy it's going in our favour at this point. We had this bullish pin here. It's unlikely that it's done anything at that point in time. Bearing in mind we wanted to be short, we were expecting it to move down, and we've got such a small amount of risk on the table. Yes, we had the bullish pin here. Maybe you moved your stop loss to break even and got stopped out, but it's much more likely that I'll just left my stop loss where it was and let the trade run a bit more just to see what happens next, really. And after this doji, followed by bearish, 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 we're happy that we stayed in the trade. We've now got ourselves a bullish candle form here, which is actually a reversal bar formation. I'd be looking to move the stop now because I'm in a decent chunk of profit. And because I'm in a decent chunk of profit, I want to just lock in what I've actually made so far. So I'd move the stop loss there to just above the highs of that bullish candle. Just as it happened, probably turned out to be a good thing to do. And we actually got stopped out there, but we bearing in mind our risk was what, 35 pips, and we locked in around 110. Another 3% gain there. It's a nice reward to risk on that trade. Okay. This was the currency pair of the year trade last year. So as we progress through from there, we're looking to get short. The 20 is now crossing through the 50, and we're starting to now get some price action signals as well, with the bearish pins, and we've also got the support level there becoming resistance. I'll be looking to get short through here now. Entries underneath the bearish pins and the inside bearish pin, and the stop above the swing high. And as it happens, been triggered into the trade. We're in slight profit, bit of a doji. Not a lot happening through here, to be honest. We can see how it's kind of just stalled and slowed out. It's not really doing a huge amount. Seller, buyer. It's not really going in favour at this point in time. Okay, we're now starting to see this support level here come into play. This could be a turning point here, where it pulls back up to the moving averages. We'll stay in the position. We won't move the stop yet, but it is a bit of a cause for concern that it's kind of going sideways over here. So we're still in the trade. Now the interesting part is we're still in this first trade here. We could have potentially taken this bearish pin as well, it bounced off the 20 moving average and off this support and resistance level. As it is, already being in one trade, I wouldn't go and double up on the next one. So I'd still be in the first trade, not the second one. And we're happy that we stayed in that first trade. And we've actually now got ourselves to a position whereby we've got the sellers here becoming buyers. It's a weak reversal bar formation, but we can see the price is a way away from the moving averages. We're tempted now to actually move the stop loss. We can see on these cycles and so on, it's not really cycling that far. So we're going to move our stop loss down now to around this kind of a level. which as it happens is probably a good thing to do. We got stopped out, but we were risking around 60 pips, and we returned 60 pips, so 1-to-1 reward to risk. Took forever to get there, but we made an extra 1-to-1. Cyclicity is still on our side. We're happy here it's moving to the downside. We'll look for other price action signals as we progress. Perhaps that inside pin bar could have been a trade there. If anything, it was just more of a wedge. We saw bullish candle, bearish candle, bullish pin, bearish pin. It's kind of a bit sideways there. There's nothing really clear, no real entry. Inside, not really a strong market at that point. There's no real entry into that market, unfortunately. We see bullish pin, we see reversal bar formation inside. Bit messy through here. Cyclicity is still on our side, but with doji, there's not a lot really we want to enter here. Getting bullish pins at a support level. Bit flat and sideways, not a lot we really want to do. That double inside candle actually, so candle, inside candle, and inside the inside candle, so double inside candle, which is pretty rare. Nothing really to trade yet. Okay, we've got ourselves a higher high and a higher low now. Again, it's very sideways. Look at the moving averages going completely flat. There's not a lot I really want to do here. I want to see either an uptrend or a downtrend now before I start to do anything. Very messy, very messy. Best thing here is just to stay out of the way, do nothing until we can see some kind of a trend. Okay, so very sideways. Still not a huge amount to trade through here. There's no real sell signals. It's buy, sell, buyer, seller, one after the other. Very sideways market. We'll do nothing really through here. Just stay out. It's safer to be out of the market when it's doing this. Okay, so higher lows and higher highs. Flat moving averages still. Very sideways over this period. Notice that trying to trade through this, we'd have probably lost money. It's much better just to stay out of the way. Actually just wait for the better quality opportunities as they appear. So right now we're doing nothing. We're just going to wait until we see better quality trading opportunities. Still very sideways. Not a lot here at all to trade, to be honest. So kind of a couple of months here really where on the yen we're not doing a huge amount. It's very much in a wedge formation right now. Higher lows, lower highs, kind of reflecting that indecision. Okay, so we've just now broken this downward trend line. We're moving to the upside, and the 20 is now about to cross to the 50. So I'm now going to start to look for these buying opportunities if they occur. Just missed one there. There's the inside candle. Now, if we look at that inside candle there, yes, as we can see, it actually went to the upside, but it's not something that I particularly traded straight away because we didn't really know it was going to be a strong market, and it certainly didn't look a strong market at that period of time. So there was no real price action entry there. There was the resistance levels through here, but there was no real strong signal. So price is actually up to this horizontal level up here now. Let's just take a look at that. Price is at the level. We can see price is actually holding this horizontal level he drew in earlier. Just go back to that. Now there's still no real buy signals here as yet. Price is starting to pull back to the averages. Buyer, seller, buyer, seller, buyer. It's still very unclear really. We've got ourselves a 20 and a 50 pointing up, but okay, we've got an inside bar there. Maybe that could be used as an entry signal. It's kind of like an entry into this upward marketplace. It's certainly been a strong move to the upside. We may have chosen to use that as an entry. But I'd like to see us break this resistance level first of all. Here we go. So we've now got ourselves a bullish pin bar. I'd be interested in entering on this bullish pin bar. And unfortunately it doesn't actually get triggered in, so we can skip past that one. I'll place the order up here, but price went down. It would not have been filled on the order. And actually we've come back now to test this resistance and support level that I that is around here, this resistance level here. We've come back to the 50 as well, put a nice bullish pin bar in there. This seems like a much more natural phase 1, phase 2, in keeping with the market sentiment right now. There's no really strong moves. It's not a stronger move there, but this is much more of a clean phase 1, phase 2, bullish pin bar, 20s above the 50 still. We're looking to get long at this point. We'd entered just above the high there of that particular candle, so we'll just show the stop loss on the entry points. Stop would go here, and we'll just copy that as well up to the top side there, and we'll just mark that in blue, obviously, because we know that that's the entry point. So just marking that in blue. I'll just pop that back there. Okay, so there's our entry into the marketplace above the bullish pin bar. We are risking in pips terms about 50 pips, 50-55 pips or so, allowing for a couple each side. We've not actually been triggered, but we've got the inside candle there. I'd move the entry down. We've been triggered into the trade. Not going great for us, but we'll still be in the trade here, and we'll see what happens next. So the price starts moving in our favour, quite aggressively actually. We've got ourselves a potential entry point here off this inside candle, but we're already in the market. Let's just see what happens. So we're still in the market. Wow, this is really going there. And we've actually got ourselves a bit of a bearish pin bar there. It makes sense to get that stop loss moved right up and lock in the profit that we've made. It's highly likely through here we'd have probably moved our stop loss again, somewhere like that, to break even. But we've actually now got ourselves to a position where we had an entry point of around a 50 pip stop, and we've made 270, so we're happily in profit. And we'll just keep going through. And actually it worked out to be a good exit. So made 270 pips from a 50 pip stop. It's at a 5.4% there. That's a solid trade. That's a solid reward to risk. We've actually now jumped straight back in again and got ourselves a bullish pin bar. Not sure I'd trade this straight away. Yeah, I want a bit more of a pullback first of all. Here we go. So we can see this pullback now. Suddenly I'm a lot more interested. It looks like a much cleaner phase 1, phase 2, bullish pin bar. Just seeing one straight away didn't really fill me with much confidence. But I'd certainly be a lot more interested now. Just mark the stop loss there. Entries here. So we've got to stop down the previous one. We've got an entry and a stop there. Our risk here is again about 50 pips. So it's a nice small risk still. We've got ourselves cyclicity in our favour, higher highs, higher lows. We've got moving averages in our favour, and we've got price actions. We've got three things there on side. We're in the trade. I don't know if we've got triggered straight away, but certainly after the inside bar there as well, the inside candle, we got triggered into that one to the upside. Price is still moving along. We're in the trade. It's kind of quite sideways right now. Not a lot's really happening. We're in the marketplace. You can see how the price is going sideways here. It's kind of just catching up with the moving averages. Wow, big move to the upside, so we're happy that we're in there. Took a week or so to get through that sideways moving market, but we can see now prices pulled back to the average and pushed up. We're still in the trade. I'm actually making some money now, which is nice. We've got this bearish pin bar here, and that would probably give me a good cause for concern and make me move my stop loss. It's a bearish pin bar, and it's also a reversal bar formation, so it's a good reason to want to move the stop. Bearing in mind we've risked 50 pips, we're up 2%. It's a good time to move stop at that point. You know, we can lock in twice what we risked originally. The yen has different ideas. It's still moving to the upside. Got another bearish pin here. Still a buyer bar or bullish candle still, but we've actually got a pin, so we should again really look to move that stop loss underneath to lock in the profit. Bearing in mind we're sitting about 2.5–3% up now. It's not likely going to go that much further. Let's just lock in that profit as much as possible. And there we go. Just got stopped out. And it's a sensible time really just to lock in the profit that we've made. So from the 50 pip stop, we've generated about 190 pips of profit. So 190 pips of profit from the 50 pip stop. Another 3.8%. That's a decent winning trade there again after the back of another 5.4% previously. So this is going really well for us right now. This is going to start to be a little bit more aggressive, seeing as that we've had some big wins. We can start to try and find more aggressive entries into this strong trending marketplace. We can see that the moving averages are angling upwards more and more, indicating the stronger trend. We can also see they're separating further and further, indicating again the trend is getting stronger. Now I don't like this first bullish pin bar purely because it's straight after the bearish pin. But now we've got ourselves another bullish pin bar, two bullish pin bars in a strong upward trend, and it's an inside bullish pin. Gives me a reason to be interested in getting into this next trade. I've been really interested now in finding a way into the marketplace on this bullish pin. The entry point would be above the highs. We'll just pop the stop loss underneath the lows. We're looking to get long at that point. We're in the marketplace. It's going well. Yeah, you can see how nice and strong trend it is. And we get the bearish pin. Same routine as last time. Really good time to move that stop loss up. Bearing in mind our entry point to stop loss was about 60 pips on that. So risking 60, we're up over 120. We've banked more than 2%. We're happy to do that. And as it happens, it worked out to be a good choice to do it. So we actually end up making about 135 pips there from around about a 60 pip stop. So another 2.25% return. Just you can see here now, trading the trend, we're just printing money one after the other by taking good high probability opportunities with the trend. And of course, we made sure that we stayed out the marketplace when it was sideways and a little bit scary really. So we're happy with where we're at. We'll look for more opportunities now. We could argue actually that this was a seller buyer potential opportunity. There's not a lot more there really, to be honest. There was no real the moving averages, the cyclicity is in favour. Not really a strong reversal bar signal. Here we are. We've now got ourselves a bullish pin bar. This is looking actually quite interesting because we've got resistance here becoming support. We've got resistance becoming support. Moving averages are in favour. Price actions in favour. We've got everything lining up here. Moving averages, support and resistance, price action, horizontal level, the lot. So again, we've marked it on. We've looked to put an entry point above the high. Stop loss would go underneath the low. We've been triggered into the trade. We're happy. Small bullish candle. We're still happy with that. Bearish candle, slowing down a little bit. Okay, got a bit of a pullback now, so we've still got higher highs and higher lows. The market is not quite as strong as it was, and we can see that with the 20 and the 50. 20 has just turned in very slightly. We've actually got ourselves another bullish pin bar here now, but we're still in the first one, so we wouldn't really want to take the second trade. Otherwise, we'd just be doubling up. Okay, so it's still going in our favour. Still got higher highs, and this is where we are right now. As it stands, we're risking about 120 pips. And we're about 190 pips in profit. Our stop loss at this point in time, realistically, is probably going to sit at the level it is right now. It's still risking 1%. I'm not going to put that into the table because while we're risking 1% here, odds are we're going to get some form of price action signal as an exit around there, and we're going to be able to move the stop loss to lock in at least a 1-to-1 profit. So we won't take that into account in our results, but if we go back across and have a look at what we've managed to generate, over 9 trades over a year on the daily chart, we're sitting at 23.5% up. Now that's a massive return, and the really interesting thing is the size of the winning trades. Big winner, still a decent size, big winner, big winner, big winner. We can see that they've really started to add up. There's not really been many losers, one losing trade. Now 23.58% is massive over a year, especially over 9 trades. It means that on average, out of the 9 trades, we've actually put ourselves in a position whereby every single time we've traded, we've actually made 2.62% back again, which is really, really cool. Now, our average winning trade through here is the sum of all the winners put together here. And we're going to then take those and divide by 8. Because of 1, 2, 3, 4, 5, 6, 7, 8. So our average winning trade was actually 3%, just over 3%. That's a 3-to-1 reward to risk. And that's kind of the reason why we've ended up where we have. We've got ourselves into a position whereby we've won 8 out of the 9 trades, which has given us an 88% success rate with a 3% to 1 reward to risk. That's 3-to-1 reward to risk with an 88% success rate, which is absolutely huge. So we can see how that combination of price action, moving averages, cyclicity, horizontal levels all put together gives us a really solid foundation to make good profits from the marketplace. And bearing in mind, we're only trend trading through there. We haven't been doing any of the advanced stuff in the Pro Forex course. And if we just take a quick look now at what the actual equity curve would look like, we would have, we'll just do a cumulative report of all of those, and we'll just now insert the equity curve. This is pretty much as good as it's going to get, equity curve wise. We can see it pretty much goes from the bottom left to the top right. Of course, with only one losing trade through there, that's going to happen. And it's actually a small sample size, but over a year we can see we went through bar by bar, worked out the trades that we wanted to take, and we can see the result there as well. Granted, this result actually double that of the euro-dollar result that you saw in the previous video, but you can still see for yourself that this price action with the supporting factors leads to very consistent profits in the marketplace. Again, as mentioned in the previous video, please take time to go through and study this material. Make sure that you actually apply it to the markets on the past data using the trading simulator, or bar by bar as I did. Simply use the F12 or the function 12 key on your keyboard to go through bar at a time, and you can then go through and plot which trades you would take and which trades you wouldn't take. Do this for a few currency pairs, as it really does build your confidence and build your belief. But notice that the length of these trades on a daily chart was actually a couple of weeks. And really trading 10 times or 9 times over a year on this particular currency, and then 11 times on the euro dollar in the previous video, it's like 20 trades in a year for over 34.5%, 35% return. Which 30% return is good. But that's only from 2 currency pairs. So you can see for yourselves how this can really start to add up and get very, very interesting. Notice though, we didn't do any counter trend trading here. The majority of what we did was all trend based, trade with a trend, and price action.